It's no secret, Palantir has a massive cash hoard with investors ready to give their 2 cents from both sides on how they should use it or just not. But this might actually be a symptom of their success, but with obvious caveats. With close to $4 billion now in cash and cash equivalents and treasuries from their latest earnings results for Q1 2024 a couple weeks ago, they of course will officially pass that $4 billion milestone number this year in 2024 if the status quo is held the rest of this year. But who knows, things can change over 3 quarters. Now, I want to point out first, Palantir is being very intentional of not using this cash because a simple look at their balance sheet shows they increased their positioning from $2.8 billion to $3.3 billion in value for marketable securities in that line item. So it's a $500 million increase over 1 quarter, and that's no mistake. $500 million they decided to get a higher yield from than just sitting in cash, so that may be telling of management's outlook, at least for the near future. Now, first, I can think of an obvious reason, as with everyone else, that has more to do with macro conditions like inflation. Even if not rising drastically anymore since we've gotten to a high baseline already, it may remain stubborn to go back down. Hence, the Fed will likely be more cautious in any interest rate decrease, which means the attractiveness of these treasury bonds and yields they're getting on a risk-free rate of return makes it that much more difficult to throw a pile of cash at something with a riskier rate of return. So I understand the better than safe than sorry approach, considering the incentives to be conservative are still there. And technically, at a very, very small level, Palantir is contributing and helping the Fed's inflation target by not spending as much. So win-win, right? But that's the easy answer on the surface. So it's clear the intentions and purpose of this cash usage is probably not going into any major, huge acquisition-esque type of actions for Palantir anytime soon, like within the next 2 quarters. But that still leaves them with a respectable $520 million in cash and cash equivalents, which is not chump change for certain activities. Obviously not a full-on acquisition of a major competitor level of money, but something smaller if there's certain technology around them they want to acquire. And I'm not referring to buying SPACs, of course. We've seen optically at least, how that has turned out with their equity positions, but in recouping their investment through the revenue deals didn't actually turn out so bad. But then the argument turns into the quality side to what was the point, because the quality of the investment does bring into question your decision making for management, and it is a roundabout way and kind of sneaky way to recognize revenue. So I believe Palantir's management is totally past that stage, licking their wounds and moving on. So now they seem focused recently, though, on further sandwiching their sales funnel. So we all know about the boot camps and their push for existing and new customers to get their hands on AIP and actually work with it, and then get a real usable use case, and then eventually lead to a new or expanded contract, or just plain increased usage from existing customers, where we saw that nice little bump in their net dollar retention recently from last quarter that was also actually alluded to in the earnings call of not showing the full extent or excitement of management has for the new customers coming in, since it is that metric that looks backwards. Then on the other side, we've been seeing the initial pushes for Build with AIP to get individuals of the public and developers the chance to work with Palantir's products and get it into their hands too. So it's clear they're not just sitting and twiddling their thumbs, and they are spending some money there. Now, we don't know the cost yet associated with running boot camps and their true scalability yet, as well as the Build with AIP initiative, since it's so early and all new. But based on the balance sheet actions I pointed out, it's most likely not cash intensive at the moment, but we'll see how things scale up. And you definitely can't forget the cash pile conversation always brings up buying back shares, which I'll admit I was not expecting them to do anything with this for a long time, considering their current valuation on the market. But management did buy that tiny amount of a few 100,000 shares, definitely a drop in the bucket when you got a couple billion shares outstanding. But I'd say this is more symbolic here in showing shareholders that they can use the money, even though they did buy back shares around the $24 mark. So how else would $500 million or $3.9 billion sitting around be used for? So they are operationally cash flow positive, so they've got their bases covered there. Hence, the pile keeps growing without usage. But remember, this is still technically crushed up with stock-based compensation, which is already a whole other conversation on its own for sure. But assuming the status quo remains, this symptom of continuing to grow the cash pile, which is a nice symptom to have, might just be the nature of their business and where they are at now in maturity, where throwing cash at R&D is actually going to have diminishing returns, whereas the quality in the choice of how they spend dollars will have a greater impact instead. Now, obviously, someone will argue, well, just use the whole cash pile at whole quality returns, but that's just the thing. High yielding opportunities aren't just laying around sometimes. It just takes that sweat equity of your best and brightest to solve those problems and, of course, try to scale that to more and improving your efficiency, product quality, and creating more innovative new technologies to build upon your offerings today. And it's also not clear if your actions will pay off, which is that trade off of risk free returns in treasuries versus maybe a potential 20% return. But the uncertainty is so high, and if you'll figure out if you'll even get those kind of results, you just don't know. So I believe Palantir, in their own perspective, is happy, at least for now, with the progress and innovation that their engineers are making to their products, continually releasing functionalities and use cases, bringing real value to customers. So the path forward of getting to the next level, though, is not necessarily clear, besides the potential increased reach with Build with AIP that we are seeing with the beginnings of. So the answer for cash continuing to sit around to me is that management is waiting and being intentional, like almost like a Buffett Berkshire Hathaway approach, not necessarily a huge acquisition, but Palantir wants to find such a high quality investment that they're also confident in against with the risk and competent in as well before they sink a boatload of money into it. And that's respectable for me as an investor. There's no rush in this high interest rate environment. And if you're able to, at such minimal incremental investment, to keep releasing their new use cases and products, albeit they are smaller parts within the whole system, ecosystem, and platform of AIP, then I'm all for it. No one is expecting a new platform every single year, although it would be interesting to see what the next big thing or next level will be after AIP. I'm assuming like how they built AIP, the learnings that they've had as a company from decades of experience in building Gotham, Foundry, Apollo, and now AIP will yield something we might not even know we need yet as AI is starting to be more widely adopted. And that's another possible symptom that their money-making machine with the minimal increases in research and development spend shows that they've mastered having an awesome, valuable platform that now they can just continue to build upon it without needing to throw so many dollars at it. Which brings me to something I want them to actually throw money at: sales. We know they're still working on it, and that was actually admitted by management on the last earnings call. But funneling in customers doesn't necessarily mean more and more salespeople forever. But it wouldn't hurt to have those skills present at a boot camp per se, converting over the potential customers who are more on the fence and aren't already working with Palantir. So in regards to using cash, I wouldn't mind more initiatives around their sales and marketing and getting their name out there as long as it's high quality. Not some billboard out in the desert, of course, but rather where the nice fitting customer profile is of who's actually going to potentially use Palantir. But obviously they'd know best how to identify this, so if Build with AIP is a way to help assist them in funneling warm leads to salespeople, I'm all for it, and hope that works out because someone already willing to contact Palantir after working with their products more than likely is reaching out to get more of it and not to complain, I'd say. And who knows, one developer getting excited about this can potentially increase the likeliness of word of mouth and sharing amongst peers or even the own company that they work out, which can turn out better than expected, so we'll just have to see. So that's just my quick opinion on the cash pile here, continue to grow. What are your thoughts below? And I'll see you in the next video.